in this question of bank reconciliation statement, they're asking state one benefit of preparing a bank reconciliation statement. So we could have multiple answers. One is that it checks the accuracy of the cash book entries. So you can say that it checks the accuracy of cash book entries because we reconcile with the bank statement entries. And also you can mention that if there are any errors or frauds, it can be detected. Okay. Now let's move to bank reconciliation statement. On 31st March, one identified the following transactions had not yet been entered in the cash book. Cash banked 350, check to restore petty cash $75, bank interest received $8, standing order for rent $300. Now what happens here is, in this case, these are all, we have to prepare a updated cash book as well as bank reconciliation statement. So to prepare, first we will prepare cash book. So we know that all the entries which are done in the, which are reflecting in bank statement, they are not in the cash book, or they have not yet entered in the cash book. So we will add it up, we'll incorporate that. So balance brought down is already mentioned. So let's say cash banked 350. That means there was a deposit of 350 which was not entered in cash book. So this is debit and credit. Deposit means we will increase. So first you identify what are we going to do. We are going to debit it. Check to restore petty cash. That means a check was issued for petty cash. So we will subtract, or we write it on the credit side. Bank interest received. Money has come in the bank directly. So this should be added up. That means we debit it, debit the cash book. Standing order for rent 300. There is a rent standing order. It's an expense. So we write it on the credit side. Okay. So let's complete it fast. Everything will be on March 31st only. And this is going to be cash 350. Followed by check restored petty cash. So you can write March 31st petty cash 75. And then we have bank interest received 8. So you can say bank interest $8. And then we have standing order for rent 300. So rent 300 on the same date. All right, now we will balance it out. So when we balance, of course, this side is bigger. So we get 1,458. This side 1,458. There will be a balance carried down on the last day. Balance carried down 1,083. And the same balance on 1st of April. Balance brought down 1,083. Now with this we will proceed to make bank reconciliation statement. We know that we just have to record the unpresented checks or outstanding lodgement, these two things. So we have to record that. Let's do that. Updated cash book balance, we have 1,083 and it is a debit balance. So 1,083. And then we will add unpresented check. So unpresented checks were 250. See, bank statement showed a credit balance. So in the end, we should be able to get that. Then we will know that our working is correct. So unpresented check is 215. And we are going to less outstanding lodgement. 770. We'll subtract. So finally, what do we get is 528. Now see, this is balance as per bank statement. Now you see, this and this is tallying, so our working is correct. Now the next question is, state two characteristics of each method of payment. Standing order. Okay, standing order is an instruction given to bank by the account holder for any expense which is coming in to make this payment every month. So it is repeated, right? So this payment is always repeated, or it is fixed in nature. And then who initiates it? So it is initiated by it is initiated by the drawer, the one who is writing, or the account holder, the one who writes the check. Whereas direct debit is the payment keeps on every month, it may be different amount. And who does it? Initiated by the payee. That means the supplier, or suppose the business takes bank loan. So there is a auto debit. So that is a direct debit from the bank. So we can say it is a variable payment. Okay. And it is initiated by the payee. Okay. So this is the solution for this kind of bank reconciliation problem.